Welcome to another Ronel Talks Money show. Now, today I have a very special guest, and it's going to be a really exciting discussion. And he's joining us all the way from Istanbul, Turkey. But before I introduce him, I just quickly want to remind you, please subscribe to the channel. And there's also a link in the description field where you can enter the monthly giveaway competition, where you can win one of my books, Financially Fit and Wealthy, as well as various other finance-related resources. But today, like I said, joining us all the way from Istanbul, we have Richard Harrington. Now, I just quickly want to give you a short introduction, and then he will share his very inspiring story with us. So at 24 years old, Richard Harrington cracked the code on profiting from a recession. Born to humble beginnings in South Africa, he now dedicates himself to helping others on their journey toward financial freedom, believing that when we rise, we have an obligation to lift others up too. How awesome is that? And then he holds an investment degree. Richard is a global investor and was just featured in the Forbes December 2020 issue alongside his mentor and $80 billion stock investor, Warren Buffett. How awesome is that? So, Richard, thank you for joining us today.
No, it's my pleasure. Thanks for having me, Ronel. Just hearing my bio, you're making a brown man blush.
No, you all absolutely have an amazing story. And I think you should maybe just kick off by sharing with us a little bit about your story, how you ended up being where you are today.
Yeah, I tell people when I share my story, I like to share the dirt. I like to share my mistakes and failures because I believe we learn more from that. Yes, I received a BCom degree and then the very next year, I received my first job as a junior investment analyst. And the first paycheck I received, I blew it because I wasn't used to money. I never came from money. I wasn't taught about money. So I blew my first paycheck. And not just my first paycheck, after 2 years, I just wasted money. Money came in, money came out. I didn't know what I was doing, what was happening. And then I found myself deep in debt. Deep in the red, and I couldn't approach my friends because my friends was also in debt. My friends was also broke. Which would have been the blind leading the blind. And honestly, I was embarrassed because I have a BCom degree in finance and I can't budget. So I was really embarrassed and I didn't know who to approach. And I thought, okay, I was the one who got myself in this mess. I'm gonna have to be the one to pull myself out of this mess. And that was the day I took personal responsibility for my mess. I tell people, when you own your mess, you're on your way. As long as we blame other people, we give our power away. So that day, I took responsibility for my mess. I watched webinars. I did online courses. I read ebooks. I got a coach and a mentor. And after 12 months, I wiped out all of my debt, completely debt-free. Because I learned how to hack my mindset and hack my habits. And that's why when I did the research on people that win the lotto, I'm like 10 years later, they're worse off. And like people's like, what happened? You had all these millions, now you're broke. It's because they had money, but they had a poverty mindset. They had money, but they had a poverty consciousness. And in that year, I broke that poverty mindset. And I learned some new habits because broke people are broke because of broke habits. Wealthy people are wealthy because of wealthy habits. And that's sort of where the story ends. I was riding home from work one day and I saw a beggar at the robot, and the thought hit me that this beggar has no debt. Because up until that moment, I thought, I'm the man, I wiped out all my debt, can't touch this. And then I saw, oh my word, the beggar is also debt free. So there's another level, and that's financial freedom. And then actually free, but they have no idea what what financial freedom means. And basically, financial freedom is when the income from your assets is enough to sustain your lifestyle. You no longer need to work. You work because you want to, not because you have to. You are free from that time money exchange. You are free. You're financially free. So I thought this sounds awesome, and I went researching what is the number one asset that I could pump this money into, because I had no more accounts and debts and credit cards, and I knew if this money lies in my bank account, I'm going to spend it, live my lifestyle back into debt. So I needed a place to funnel this money, and I researched what is the best asset out there, um, based on ROI. Because for investors, the number one term is ROI, return on investment. And I researched everything, Ronel, everything. I mean, ETFs, Satrix funds, unit trust, money market, tax-free savings, you name it, real estate, everything. And the number one asset I found over the past 4 decades was equities, listed shares on the stock market. And I began to pump my money into there. Uh, but the secret was individual stocks. So not funds, not products. We can speak later my reason for that. But I chose individual stocks, and then 3.5 years later, my return from my share portfolio matched my salary, and I quit my job. I'm at 24 when that happened. I'm now 32. It's my 8th year being financially free. And the last time I had a job was I'm at 2013. I've never had a job since because I have assets. I tell people my security is in my assets, not in a government, not not in a job. It is in my assets. The name of the game is assets. And I currently just live in Bali now. We went on a holiday and now we can't get back into Bali because they closed the borders because of Corona. So at the moment we're in Istanbul now. We're just waiting it out. And but Istanbul is a beautiful city, so we are enjoying every minute of it. But I thought I'll just share a quick background, and that's my story.
Oh, Richard, that is so awesome. And I think it's so nice too, because you always read about these things in books and people tell you the theory, you need to do this, you need to do that. But it's so nice to hear it from a person who has actually kind of done the research and the work behind the scenes. But then the important part is like in application, you went and you actually applied what you've learned. And that is basically why you have seen such wonderful results. And now you can tell the story. So well done on that. It's an absolutely amazing story. And then,
Thank you. And just now, I just want to empower people with my story.
Yeah, and absolutely sharing it and try to empower more people with that knowledge and experience. But Richard, you've mentioned now in your story kind of the importance of having a mentor, building a network, financial education in terms of research and understanding how the financial world works. How important do you believe are those things to achieve financial success?
It is super, super important, because one of my favorite quotes of all time is by Jim Rohn. He says, "We're the average of the closest 5 people in our lives." And that was my story. I was broke and in debt because the closest 5 people in my life was broke and in debt. The day I changed my circle, my bank account went up and up and up. Like, people laugh, but that's the truth. when I changed the closest 5 people in my life, my net worth went up and up and up. And that's why the saying that your network is your net worth is 100% the truth. And I mean, I picked up my first Warren Buffett book in my first year of university, and I've read 9 of his books, so I was hooked. and what I found out from him was that he had a lecturer in his business school, Columbia Business School, Benjamin Graham, which turned out to be his mentor. So it's everything he learned, it's everything he applied. He learned it from his mentor, Benjamin Graham. And Everything I apply, I learned from Warren Buffett. What's my point? We found a successful model and you just replicate it. You see, the goal is not trying to reinvent the wheel. No, no, no. The goal is to find someone that is successful by your definition of success. So we all have our own definition of success. So find someone that matches your definition of success and replicate the model. What do I mean by that? Don't replicate the fruits. The fruits will take care of itself. Replicate the seeds. You want to study that person. You want to find out what they did. Because if you do what they do, you'll get the fruits. So there's this joke that if you record a video of this inside of a millionaire's mansion, it will have 5 million views. If you record a video of is how to invest like that millionaire, it has 5 views. So people who are interested in the lifestyle and not what they actually did to get the lifestyle. So like number one, you've got to find a mentor that you want to manifest the same fruits. You can't follow someone that you want to manifest something differently. Once you find that person, I call it a deep dive. You have to dive deep. The gold and the oil is deep. You got to dig deep. You got to read their biographies. You got to learn from it. You got to watch them, and then you replicate it, and the fruits will take care of itself. And so his mentorship has changed my life. Having a solid network around me has changed my life. I tell people you have to audit your inner circle. Is every year you have to say, is this the people I want to take with me into the new year? Because we deserve the best friendships. We deserve to surround ourselves with quality people because people rub off on us. So I hope that answered your question about the power of mentorship. We just want to find a successful model and replicate it.
Now, Richard, you have obviously chosen Warren Buffett to be your mentor and to basically learn from him what made him successful and how you can also apply that. And now you obviously have that story to tell to say, but it actually worked. I've also achieved success based on what I've learned from Warren Buffett. But what would you say, what do you admire the most from Warren Buffett after really, like you said, digging deep into studying him?
Wow. Well, there's many things, but I think what attracted me to him right at the beginning was there was a reporter that asked Warren Buffett, is why do you live in this 3-bedroom house when you're worth $80 billion? And he said, in this house is where I have the best memories with my wife. In this house, it's where my children was born. And I paid $30,000 US for this house. He then said, I can buy his house for 30 million, and I can't buy these memories. And that's when it hit me that there's more to this guy than money. He's more than a money guy. He has a holistic view here. He has the right relationship with money. So like when I retired at 24, I didn't know what to do with myself. So I was actually went to Bible school for 2 years. And then it was the 3-year program, and I left after the second year. It was so crazy because in religion, they have this bad relationship with money. That money is bad, money is evil. If you're broke, it's actually noble. You're more spiritual when you're broke. And like Warren Buffett actually turned it on his head because he's one of the biggest philanthropists of all time. So like he's handed away more than 30 billion US dollars so far. He's given away. When he dies, 99% of his money will be sent off to charities. Will leave the family and be sent off to charities. What's my point? I saw from Warren Buffett that you can be a philanthropist. You can use your wealth and your money as a force for good. And that's when the change began to happen in me, that I believe that the more money you have, the more spiritual you can be. because now you can actually bless the person on a practical level. You don't just see a hungry person and you pray for them and then, okay, bye. Oh God, I hope you'll be fine. No, you can actually buy food. You can buy the jacket because you're in a position of abundance. You're in a position of overflow. And that's what attracted me to Warren Buffett, that not that he's worth 80 billion, but that he's the biggest philanthropist on it.
No, and I mean, how beautiful is that? Just to have that kind of this, like you said, much more than just a money mindset. And it's all about giving back, like you have in abundance, why keeping it for yourself? Why not blessing? And I mean, that could be with money, it could be with sharing your knowledge. That is just absolutely, I think, what everybody should strive towards achieving in their lives as well. But if we go now more into a bit of the physical investments, what tips can you basically give to the viewers based on the Warren Buffett investment strategies? What can really help them?
Yeah, look, Warren's famous for saying, if you buy a stock and you can't, picture yourself holding it for 10 years, you shouldn't buy it. So right there, you have to have the mindset of a longer term investor. So I tell people, you got to play the LG, you got to play the long game, because people that want to make money is overnight, loses money overnight. So you have to approach the stock market with an investor's mindset and not the trader's mindset. Mm-hmm. So what's the difference? The trader is there speculating, looking for short-term profits. An investor invests for the long term. So as a trader buys and sells, an investor buys and holds for the long term. You see, at the end of the day, as Warren Buffett says, the secret is to look at the stock market as a collection of businesses. If you look at the stock market as a collection of businesses, you will make money, because now you will evaluate the profits, the business model, the management team. You evaluate the business. And then once you have your own number, like based on your financial research, the true value of this business, now you go to the market price to look at what the share is selling for. But what people do is they look at a stock price at $50, and then next month it's $100, and then they're like, oh my word, maybe a person will buy the stock for $150, so let me buy it. What they're doing is they're trading the price, and that's not investing. Is Warren actually says he doesn't actually look at the stock price until the end of his research, because the stock price might influence his research. Mm-hmm. So he first researches the business, and the only time he looks at the stock price is to check if it's undervalued or it's overvalued. So like this whole approach, you must approach it as an investor with a buy and hold strategy for the long term. And then you have to look at the stocks as businesses. How would you evaluate a business? And then once you have your own number, then you take that number to the market price, and you check if it's undervalued or it's overvalued. Is Warren Buffett's worth $80 billion because he only buys undervalued stocks. I became financially free at 24 because I only buy undervalued stocks. You will never make money if you overpay for assets. Mm. So like he says, price is what you pay, but value is what you get. So bottom line is, you've got to look for value. You've got to look for value. And I tell people, stay away from the hype stocks. Stay away from the Teslas. Stay away from the Zooms. They are hyped up. And if you buy a stock based on hype, you're not going to make money because it's unsustainable. You've got to buy a stock because you saw value. You saw value. So price is what you pay and value is what you get. We are undervalued investors. We look for more value, not higher price. Because many people buy high and they want to sell higher. That's the dumbest thing you can do. You want to buy low and sell high because the goal is to make a profit. Like any business, Your goal is not to make money, your goal is to make a profit. You can make $1 million in revenue, but if you never watch your back door and you have $1 million expenses, you made nothing. You broke even. It's all that hard work to make $1 million rand. You never watch the expenses. Revenue is vanity. Profitability is sanity. You don't look at the revenue. You want to look at the profits.
No, absolutely. And I think that is all about the concept of value investing. But Richard, you also always explain the concept of passive income and passive wealth very nicely. So maybe you can also just touch on that for us.
Ronel, I love these questions. I love these questions. We're going deep. We're going deep. Yeah, look, I see the passive income as a big distraction, especially now with Corona and COVID, all these opportunities popping up on the internet. Sign up here and you can earn 8K per month. Sign up here, working from home, just lie on your couch and like 10K will fall from the ceiling. Or just play on your laptop and like 10K will come out. No, that's not how the real world works. The real world is not based on passive income. The real world is based on passive wealth. What's the difference? If we just use a property investor as an example, the property investor isn't interested in the rental income. Oh, you can make so much rental income. No. That person is interested in the actual property. What is the neighborhood of this property? What is the growth of this neighborhood? What is the safety of this neighborhood? What is the quality of this actual property? Because he knows if he researches the passive wealth, which is the property, the passive income will take care of itself. And on the actual asset income. And that's why there's so much network marketing scams out there. People fall for it because they put the focus on passive income. And for wealthy people, it's not about passive income, it's about passive wealth. If I look at my own life, many people hear, oh, I became financially free at 24, and then they think it's an overnight thing. No, it's not. I read 9 Warren Buffett books, and I worked for 3.5 years as an investment analyst. What's my point? It took me 12 years to build passive wealth. And then in 2013 was the first time my passive income replaced my salary and I could quit. But the focus was never the passive income. The focus was the passive wealth. The focus was I need to upskill myself. I need to get the best mentor. What was I doing? I was building my passive wealth. I need to research the best assets. Why? Because that assets is my passive wealth. I need to actually buy the stocks. Why? Because that stocks is my passive wealth. As long as we keep the focus passive wealth, you will be wealthy. And the broke people just put the focus on passive income. How much can I earn here? How much can I make here? And here's the secret. You can't earn your way to wealth. You invest your way. And the Forbes list is the proof of that. The wealthiest people in the world, they are not ranked according to their earnings because they don't have jobs. They're ranked according to their net worth of their assets. And so people that still has the focus of the paycheck mentality, oh, it's 2021, I hope this is the year I'll make $1 million. And then what? A wealthy person, they're wealthy because they know where to invest that $1 million. Because it's not about earning, it's about what are you going to do with that earnings? Where are you going to put those earnings? In investments, we call it ROE, your return on equity. What is management's ability to reinvest its profits? That's what you look for. If they know what to do with their profits, you're on your way. If management doesn't know what to do with their profits, they are in trouble. And it's not to get too technical here, but that's why I don't invest in dividend stocks. Because if you pay out your profits to the shareholders, what's left to reinvest into the business? What's left to grow this business? Remember, it's how you made your money in the first place, through the business. The business is your passive wealth. you have to make the passive wealth a priority, and the passive income is secondary. So it's not about passive income, it's all about passive wealth.
Absolutely. I love that, Richard. I just want to also, you've mentioned now about property and obviously all the other clauses that you have researched as well. But what's your view in terms of diversifying, or should you more select kind of one asset class and then first put all your focus on building that asset class, or what's your view on this?
Another great question. So like there's two types of investors. There's a beginner investor and there's an advanced investor. And there's nothing wrong with being a beginner investor because we all have to start somewhere. So for a beginner investor, diversification is the name of the game. So like Warren Buffett says, you mustn't put all his eggs in one basket. Have multiple baskets. Have multiple geese that lays the eggs. So you diversify. Okay, there's nothing wrong with that. But if you want to beat the market, we call it alpha returns above the benchmark. You have to use an advanced investment strategy known as hedging. So his hedging is when you go into 2 assets, not 20 assets. So many times people have $1,000 and they're 20 stocks with $1,000. You're not going to make money like that because you're over diversifying yourself. His risk is spread too thin, and that's one of the major flaws of unit trust, index funds, ETFs. It's a good start for investors. It's a good way to get into the market, but you're not going to beat the market with being in a fund because you diversified, but you over diversified. So the goal is you want to have a core asset, right, where you make most of your returns. Then you want to have a hedge asset. So that's basically just to cover your ass. Excuse my French, but to cover your ass. It's your insurance policy is on your stock. So put this practically. No matter what industry it's in, the tech industry, renewable energy, this industry doesn't matter. I will hedge that stock with a gold stock, or is any commodity stock, so gold, silver, platinum, and I'll hedge myself. So I won't diversify over 10 new stocks every month. No. I have one stock and I use hedging with a gold stock. And the reason why hedging is the best, diversification, is because it moves in completely opposite directions. So when the market takes a dip, the gold price shoots up because people see gold as a safe haven. So that I'm protected on the core share I bought. No matter if that core share drops, I will make money on the gold share because there's this inverse relationship there. So a perfect example now for Corona is, yes, if you want to buy this overpriced, it's overpriced. I'm like streaming stocks. Like if you want to buy the Netflix, if you want to buy the Zoom, then you hedge yourself with an airline stock. Why? Because when Corona is peaked, its airline stocks fall. When we post Corona, those like streaming stocks will fall and the airline stocks will boom. On a streaming stock and an airline stock, it's a perfect hedge. So what you want to do is you don't want to diversify, you want to hedge yourself. And usually it's just 2 assets, your core asset and your hedged asset. And then if you really want to make money, it's not 50-50, it's usually 60-40 or 70-30. So you put 70% in your core share and 30% in your hedge share. Why? Because you're a natural optimist. You actually believe that your core share will work and the hedge share is a backup. It's very rarely that you'll find a wealthy pessimist. That also has a lot of speaking about the diversification and hedging. People that over diversify, maybe it's a mindset problem. Is maybe they're too pessimistic, and they need to become optimistic about the asset. And if they're not optimistic, there's a deeper issue there. Maybe they need to research the asset more, because if you research your assets, you become more confident in what you're doing. Like Warren says, the only risk in the market is an investor who doesn't know what he's doing. Just invest in assets you understand. If you don't understand it, stay away from it.
Oh, absolutely. And I think that you are also teaching this whole concept of your core share and your head share very nicely as part of your inner circle. And you can definitely see the results of that. But Richard, for like a novice who wants to get into investing in shares, but they do not really know where to start in terms of analyzing a company and the financials and all of that, what's your advice in terms of where to start off?
Yeah, I think step number one, ignore the news. Ignore the news. The news is noise. You have to research the actual business. Forget about the economy, forget about the government, forget about the exchange rates. All that stuff is fluff. All that stuff is noise. The more noise you ignore, the more money you'll make, because the market will reward your research of your asset. So you want to shift the focus away from the news headlines and onto the business. In fact, if that stock has hit the front page of the newspaper, you've missed it. You've missed the boat, because now it's hyped up and it's overvalued. And if you buy that stock now, you're buying it at a massive premium. How are you going to make a profit on that? So what many people do is they look at the logo. It's like, oh, I love that logo. Let me buy that stock. Or I love that company's advert. Let me buy the stock. You're going to lose money, because those are not investment reasons. Your starting point is the boring stuff. It's the balance sheets. It's the track record of this management team. It's researching the industry. Is this industry profitable? It's the boring stuff. As Warren Buffett says, if you want to get thrilled, don't do the stock market. You do roller coasters. You go to the amusement park to get thrilled. Researching stocks is supposed to be boring. Because what you're looking for is you're looking at the numbers. Numbers don't lie. You're looking at the fruits. You judge a tree by its fruits. They can say, 10 years from now, we're expanding to China. Oh, that's an amazing story. Can I see the balance sheets? Are you profitable? What's your 5-year track record? What's your 10-year track record? So my best starting point is only invest in businesses you understand. What do I mean by that? How do they make money? If you don't understand how they're making money, how are you going to look if it's profitable or not? And starting point number 2 is only invest in businesses with a solid track record. What do I mean by that? But what is your 5-year profit track record? And is your profits in the future sustainable? And to a fair percentage, is it predictable? You see, an investor, we don't invest for the next year. We invest for the next 5 years, the next decade. So we have a longer term outlook here. And if it's very hard to measure, if it's very hard to measure, can Tesla sustain this massive growth rate after the next 5 years or 10 years? You can't invest in it. You want a level of consistency and sustainability. It's actually Benjamin Graham that says, when the stock price rises, it actually makes it more risky and not less risky. When the stock price falls, it actually makes it less risky, not more risky. And what's he saying? If the share price rises, it gets hot. It gets a lot of heat. It's on it. And if a majority of investors realize that stock is overvalued, they're going to sell it. And supply and demand, when majority of people sell out, that stock price begins to fall. So if a share price is racing, it's actually more risky than when the share price is falling. It's crazy. It's like a total. You got to go against the herd, and that's why like Warren Buffett is the most successful share investor on the planet. Net worth more than 80 billion because he doesn't follow the herd, he leads the herd. So like many people ask me, oh Richard, you invest in the stock market. What's a great index to track? Is it S&P 500? Is it the FTSE? Is it the JSE Top 40? Remember, if you track the market, you can't beat the market. So forget about the index. Research the individual businesses. And many indexes are so overweighted. I mean, South Africa is a perfect example. Like Naspers, it is too overweighted and it influences the index. So people think, oh, the index went up. No, Naspers went up. There's a rebalancing issue there. So you want to go into individual stocks and build a concentrated portfolio. It's like if you're running a business, if you have 20 businesses, you're gonna drop the ball. If you have 2 businesses, you're gonna reach your full potential. You're gonna be profitable because now you're more focused. You have laser sharp focus, and the one business edges the other business. So it's no matter where you are in the business cycle, your one business will boom when the other one is in the winter, and when that one is in the winter, the other one is harvest. You're hedging yourself based on where we are in the business cycle.
Richard, I totally agree with what you are saying there. But then a question that you probably get all the time, do you need a lot of money to invest in shares?
Short answer, no. So like people have this attitude when they just hear that I'm a stock investor, then they're like, oh Richard, when I'm a millionaire, I'm going to call you. I tell them, no. The stock market is not reserved for millionaires. It's a platform where you can make your first million. It's a platform where you can make your first million. Because look, in the past, you needed massive lump sums, hundreds of thousands before you could use a private stockbroker. Those days are gone. Now you can start your stock portfolio off your app using your own bank, so it's the safest. And there's other safe apps out there. But what's my point? You don't need hundreds of thousands. In fact, most of the apps, there's no minimum investment. There's no minimum amount. And I mean, it's not to get too technical, but in the past, you needed to buy 100 shares minimum in a company before you could buy the company. So like you had to buy 100 Apple shares minimum. Now you can buy one Apple share. You can buy one. So there's literally no minimum amount. You don't need lump sum amounts, so there's no excuse. Everyone can start somewhere. And I tell people the 2 most powerful words in the English language is just start. Just start. And people's like, oh, but if I start with $1,000 a month, will it even make a difference? If that's all you invest forever, it won't make a difference. It won't. But if that's a starting point, and you're like, Richard, you know what? I'm going to start with $1,000, but after month 3, I'm going to lift that to 1.5. After month 6, I'm going to lift it to 2,000. After the first year, I'll be on 5,000. There's growth. There's progress. See, we're not looking for perfection. We're looking for progress. When I was in the debt space, I was deep in debt. The goal was to be debt-free, but that wasn't the focus. The focus mustn't be your goal. The focus must be your progress. It's like, okay, I'm not debt-free yet, but I have one less loan. I have one less account. I have one less credit card. I'm not where I want to be yet, but thank heavens I'm not where I was. So there's progress. And that's how you need to approach investments. That yes, you want to be financially free, but put that on the shelf. Put the focus, the assets. You got to get to work. You got to build that passive wealth. And you do it one step at a time. I'm all about the baby steps. It's okay if you start small, just don't stay small. You got to have a growth projection. You got to have a timeline. Um, it's everything. If you're not growing, you're dying. There's no such thing as a neutral. There's no thing as a neutral. It's either you're growing or you're dying. So if you approach your stock portfolio with the growth mindset, it doesn't matter how much you start because you're planning to grow the thing every month, every 6 months. So just start.
Yeah, Richard, I totally agree. And I think, especially at the beginning, it's also about the learning experience and that you just get in there, even if it's with a small amount of money, but the value you get from that learning experience and sometimes even failing, but you understand more, you know more, you learn more. That is almost kind of an additional profit or value that you can actually add to your future in terms of investment. So I totally agree, just get started. But Richard, you have been featured now in the December issue of Forbes, and that was all about how to profit from a recession. Now, you've obviously done that during the previous recession, but maybe you can just tell us a little bit more about that as well.
Yeah, I was really honored to be in that article. Um, just a bit of a background story of how that happened. Um, in Bali, there's a weekly show called Speak Up Mondays, and I was also invited. We had to do this interview there for Speak Up Mondays, and it was at that event where I met a publicist lady, and when she is heard that is Warren Buffett is one of my number one role models, and that I've read 9 of his books, and I apply his strategies in all my investment decisions. She said Forbes is running his article on Warren Buffett and on the top investors as contributors. I should submit his article. When she was like telling me these things, I couldn't absorb what was happening because I thought, this is not real. And even when I was writing the thing, I was like, I'm writing this, but I have like zero expectation. I'm not expecting them to pick this article. I'm not expecting to be in Forbes. I'm just writing it. I will use this as maybe as a blog or a post on social media because it's not going to be in Forbes. So like I wasn't just nervous when I wrote it because I thought, oh, it's not going to be in Forbes. So I just wrote it for fun. And then like 2 months went by, 3 months went by, and then he says, Richard, you're going to be published in Forbes in the December issue. And I was like, oh my word. And then she said, alongside Warren Buffett. And I was like, this is too much. Forbes, my number one magazine I've been reading like for the past 5 years. Forbes Women, Forbes Africa, I've been subscribing for years. And now to be in it. And I mean, to be alongside Warren Buffett, it was really, really crazy. And the title was is How to Profit in a Recession, which was my life story. I got into the stock market in the last recession, in the 2008 crisis, and it was just full circle. And I was writing about that. Look, the rich get richer for a reason. They have access to information, is access to relationship, access to capital. That the middle class and the poor, they don't have access to. So then when there's opportunities, the rich become richer. Except when there's a crash, except when there's a correction in the market, except when there's a dip. Because then share prices are literally halved. Like some of them, they go 60%, I'm like 70% down in value. What does that mean? That is a great entry point for people to buy assets at a discount, at a bargain. And I mean, if you track the data, and I mean, if they read the full Forbes article, I included all the research I did that that a market recession happens every decade, every 10 years, and a correction happens every year. So basically, when the stock market falls by less than 20%, it's a correction. If it falls more than like 20%, it's a crash. And a crash happens every decade. And here's the secret. Wealthy people know a crash happens every decade. That's why, as Warren Buffett says, when people are fearful, that's when you get greedy. And the average person on the street must think, how the hell do you become greedy when people are fearful? When the stock market is falling, how do you pour money in? It's because this is a secret that wealthy people know. Markets always bounce back. Markets always bounce back. That's why when the rest of the world thinks doom and gloom in a recession, wealthy people see opportunity because they know the secret. Markets always bounce back. And that's what I wrote about in the Forbes article. Markets always bounce back. We've seen it in the 2008 recession. We've seen it 91 years back, all the way to the Great Depression. Markets always bounce back. We're going to see it in this COVID-19. Markets always bounce back. The question is, are you prepared? Are you ready for post COVID-19 economy? Because don't be mistaken, we're going to get through this. Humans are very resilient. We're going to get through this. But what person are you going to be on the other side? Are you going to be better off financially or worse off financially? Because here's the truth. Before the last crisis, Warren Buffett had a net worth of 37 billion, right? That was 2007. He was only worth 37 billion. I joke only, but you know what I mean. Yes, $37 billion. Right now, he's worth $80 billion. He literally doubled his net worth since the last recession. He made $40 billion since the last recession up until now. And I believe is after this next 10 years, you'll make another 40 billion. Because recessions are where fortunes are built. It's the exact same with our character. It is in the crisis where our character is built. It's the exact same with wealth. It is in the crisis where your fortune. Are you going to have the mindset when there's a crisis, oh my word, the world's going to end. It's doom and gloom. We are finished. It's Armageddon. Or are you going to have the mindset that every crisis is an opportunity? And every person I meet now, I'm telling them, do not let this crisis go to waste. Do not let this crisis go to waste. And I know it's a serious crisis. I know people have lost their jobs. People have lost their lives. It's serious. But that's only half the side of the coin. If you flip the coin, some people are winning in this crisis. Like the MasterCards, like the Visas, like the PayPals, like the Take-A-Lots, and the list goes on and on. The Netflix, the Zooms, the Facebooks, the Apples, they are winning. The people that win in a crisis are the ones that refuse to be a victim of the economy and they choose to create their own economy. I tell people, are you a victim or are you a creator? If you're a creator, you'll be wealthy. Because there's just two types of people. There's the consumers and the creators. The top 1% become richer and richer because they are the creators. The 99% become poorer and poorer because they consume everything the rich produces. Once you become a creator, you're now on the other side of the table. So, and there's nothing wrong with consuming. Yes, you can read books, you can watch YouTube videos, how to, but there comes a time where you need to implement what you're learning. Mm-hmm. And that's why right at the beginning of our interview, I said, I learned how to do two things, how to hack my mindset and how to hack my habits. There comes a time we actually need to change those habits. And that's a difficult part, but that's what makes a difference. Because life rewards people of action. And that's what I tell people. I believe in the secret, the law of attraction, but what makes a difference is the law of action. What are you doing with what you know? If people actually do 10% of what they know, they will surprise themselves. They'll surprise themselves. And that's why I love to speak to trainers and coaches, because I tell them, the proof is in the pudding. Mm-hmm. The proof is in the pudding. Did that person's life change? Because then you'll see if you really made his impact. It's in investments, we say the proof is in the portfolio. Are you making a profit in your portfolio? The proof is in the portfolio. Not just how much you know about the markets. Are you making money in your portfolio? The proof is in the portfolio.
Mm. Absolutely. That's wonderful advice, Richard. Now, you've mentioned now that we are in a crisis now. So, what would you say? What are good industries to invest in during this kind of crisis?
Yeah, Ronel, it's been like basically what we've been speaking about in this whole interview. Avoid the hype stocks. Avoid the stocks that are receiving a lot of media attention in this corona. Why? Because the media attention boosts the demand. The more demand for that stock, it lifts the stock price. So I tell people, if you want to make money in corona, you can't buy the mainstream stocks. You got to look deeper. You got to look wider. So like to get this practical now, many people say, "Oh, Richard, must I buy Zoom? Uh, must I buy Netflix stocks? Must I buy Uber? Must I buy Tesla?" No. Look past the tech industry. Look into the renewable energy. Look past the tech industry. Look into the cybersecurity industry. Because look, if MasterCard and Visa share price rises, that means all the cybersecurity stocks are going to rise. Because the more money that those merchants are collecting, they're becoming more exposed. So that they will invest a lot of that portion into cybersecurity to protect those funds. So you want to look at the cybersecurity sector. You want to look at renewable energy sector. You want to look at electric vehicle sector. So yes, Tesla is amazing, but it's not the only electric vehicle company out there. Start doing your research. Start going deeper. It is not just a Tesla story. It's a whole electric vehicle story. So look is who is the other players in that industry. In my last report, I can't mention the share name I researched because that's only for his inner circle, his members. But my last share I researched was in the plant-based food industry. And if you look at what the plant-based food industry performed over the past 5 years, it's double-digit growth. Regardless of where we are in the business cycle, that sector is producing double-digit growth. So I don't invest in the food sector because it's too low risk, low return, because it's a defensive industry. But plant-based food, that's not a defensive industry, that's an innovative industry. Mm-hmm. So you want to look at industries, okay, Corona, what is innovative sector because of Corona? And not now, 5 years from now, 10 years from now. So when I look out into the next 10 years, I see renewable energy, I see green energy, I see plant-based foods, I see cybersecurity as booming. And then obviously I'm a value investor, so if you're looking for these undervalued stocks, now's the time to go into the airline industry, hospitality industry. And but I must say that this is not financial advice. This is just education. So this is what I'm doing. So it's not advice for your viewers because they need to look at their portfolio holistically. So like if you own 10 stocks and 9 of them are hospitality shares, you can't buy another hospitality share. So it's not advice for you. It's just general. What do you think is a booming sector because of Corona? Not now, but post-COVID, 5 years from now, 10 years from now, you need to buy them now before the recovery. Because the only way to make money is after the recovery, buy high to sell higher, which is a very dangerous game. Because basically, when you buy this undervalued stock that fell by 50%, you're not actually looking for growth. You're just looking for price correction. If that share price just corrects itself to BC days, recall before Corona, BC days, if it just corrects itself You made a 50% ROI. Besides the new growth, just a price correction. And that's basically what you're doing when you're undervalued investor. You're waiting for it to get back to its true value.
Richard, I really always enjoy listening to you because you're also passionate and you can see that you really just want to share your experiences and your knowledge. And that is so awesome. So, last question I have for you. We've touched on it that there's obviously a level of I want to become debt free. There's a level of I want to grow my investment portfolio. But then there's a different level in terms of I want to become financially free. What are your tips for people who really aspire to become financially free?
Yeah. Look, we gave a lot of like practical like stuff out here today. So like soon as that's the last question, I'd like to just end on a psychological note. My biggest tip for financial freedom is you have to ask yourself, do you really value financial freedom? And what I mean by that is when I had a lot of speakers and people used to run up to me and say, Richard, I want to be financially free. Then I'm like, okay, where are the assets? I'm like, what? Like, okay, who's your coach? Who's your mentor? And like, what? Okay, what books are you reading? Like, what? You see, they had financial freedom in the head, but not in the heart.
Mm.
If it's in your heart, it will show up in your life. So it's wealthy people are wealthy because they really value wealth. Financial people that are financially free, they're financially free because they really value wealth. They really value assets. You see, the way money flows, it flows from people that don't value it to people who do. It's like if you is in a relationship and you don't value your partner, if you abuse your partner, you lose your partner. It's the exact same with money. If you don't value money, if you abuse money, you lose money. But it's all about what is your why? What is your why for financial freedom? You can be like, no, Richard, I want financial freedom so I can like travel the world. And then what? And then what? There's only so much coconuts you can sip on the beach before you get bored. And I'm speaking from experience. I lived for 1 year in Bali, and there's only so much you can do there before you want to make a contribution, before you want to make a difference. You see, there's something in every human being that you want to add value. That's when you get fulfillment. And then your purpose. When we say, Richard, I want to be financially free. Why? No, so I can pay off my debts. And then what? The beggar has no debts. Okay, so I want to travel the world. And then what? I want to make a difference in people's lives. Now we're getting somewhere. Mm-hmm. Now we're getting to your purpose, because your purpose involves others. You see, your passion involves you. And that's what people like go wrong when they pick careers. What will make me happy? What will make me passionate? Yes, you might have a business, but you won't be number one in your industry. The person that's number one in the industry, they are outward focused. The purpose of this business is not to make me passionate. No, the purpose of this business is to add value into the economy. And here's the thing. The more you live in your purpose, the more passionate you become. It's a positive loop. So my biggest tip for people that want to be financially free is it really a high value? And it will show by where you put your money. So if you get $1,000 and you go Netflix subscription or like DSTV premium, that shows you your value is lifestyle. If you get $1,000 and you buy shares, that shows you your value is assets. So my whole purpose is not to compete with the unit trust industry or the Bitcoins or the ETFs. No, my purpose is to compete with your values. If you can shift assets above lifestyle, you're on your way. But if lifestyle is still a higher value than assets, I can't help you. And here's the thing. If you put assets first, it doesn't mean you have to live like a poor soul for for the rest of your life. No, no, no. If you put assets first, over time, your assets will afford any lifestyle you want to. But you've got to have assets as a higher value above lifestyle. And you've got to have a big why. Because when your why is bigger than yourself, automatically more resources and money will flow. Why? Because you created space for it. It's not just thinking about me and my bills, me and my family. It's a very constricted environment. There's not a lot of space for money to flow in. But when you're thinking, okay, what is my why for financial freedom? What is my purpose? The money will flow. The resources will come. People will show up. They want to help. They want to partner with your vision. And the resources will be there. But I mean, it's like if I just hand someone a pen and I don't explain the purpose of that pen, they might stick it in their ear or stick it in their nose because they don't know the purpose. It's the exact same with money. People get money, they do random stuff with it, and then they wonder why they can't keep it. They wonder why they can't grow it because they don't know their why. They don't know their purpose. And that's why they have a rich year, a broke year, a rich year, a broke year. But once you find your purpose, every year consistently, you'll build your wealth. And that's why Warren Buffett is the wealthiest person, the stock market, the third wealthiest person in the world, because he's been in the game the longest. He turned 90 this year. And each year he just gets consistently wealthy because he knows his purpose. His purpose is to be a philanthropist. And I'm the same. The more blessed I am, the more I can be the blessing. If I'm broke, I can't help anyone practically. The more blessed I am, the more I can be the blessing. So what do you value? What's your why? What's your purpose? And the resources and the partners and the people will come because you know your values. When you value yourself, the marketplace will value you.
Absolutely. Richard, what a beautiful message is that to conclude our interview. And like I said, it's always inspiring just listening to you, and you can just hear that passion and that knowledge coming through. So I really want to thank you for spending some time with us. I know you are all the way from Istanbul, and I am going to share your details as well for people who want to connect with you, who want to become part of your inner circle. I am part of your inner circle, and I really, really enjoy the tips and the value and the education you give as part of that. So I'm going to share that. And then, once again, thanks a lot for spending time with us, sharing your stories, sharing your knowledge. And then to the viewers, I want to say thank you. I hope you have enjoyed this interview as much as I did. And remember to subscribe to the channel to enter the giveaway competition. And then I will see you again at the next Ronel Talks Money show.